Today we will be covering investment income and expense, which is generally shown in Schedule B of Form 1040. Form 1040. So mainly we will be discussing about interest income and dividend income. So generally, if a taxpayer who deposit cash or invest in securities generally gets either income in the form of interest or in the form of dividend or maybe in the form of capital gains, right? So starting with interest income. So interest income is like you may be able to earn interest from deposits like savings or fixed deposits, such as like maybe you have deposited in the bank or the money markets or notes receivables or bonds, right? And there may be certain interest income which may be taxable and some may be non-taxable. So there can be taxable interest income and tax exempt income, interest income. Also, there are certain types of dividends that can also be considered as a taxable interest. So such dividends are like dividends on like the share accounts. Like you have a dividend, you are receiving the dividend on the deposits from the cooperative banks. So that will not be considered as the deposit or dividend income, but it will be considered as a taxable interest income. Same way, if there is a credit unions. So if you have an account, shared account in that credit union. So whatever amount you are getting is generally called dividend, but is treated as a taxable interest, right? And maybe like mutual savings accounts. So generally, the taxpayer will give you form the payer of the interest will give you form 1099 INT if the amount of interest is more than equal to $10 in an year per annum per year. Okay. Even if the taxpayer is not the payer is not issuing 1099 INT, still taxpayer have to report all the interest income in Schedule B if the taxable interest income exceeds $1,500, then it should be reported in Schedule B, else directly on Form 1040. So Schedule B is mainly for interest and ordinary dividends, right? So, for example, uh, from the book only, if we take an example, so Zebadia loaned his best friend. So Z loaned his best friend R $20,000 for 1 year at 3% interest rate. R paid $600 as interest in 2024, which is 3% of $20,000. Since this is the kind of personal loan, obviously the payer will not, Z will not issue any 1099 INT. So even if Z have not received any 1099 INT, so R will not issue any 1099 INT to Z because R is a payer and Z is a receiver of interest income. So R will not issue 1099 INT because it's an individual and it's a personal loan. So even if Z has not received 1099 INT, still Z must report this $600 in the uh, form 1040, because the amount is not more than 1500. So schedule B is also not required. Right. So schedule B is also not required, and 1099 INT may also not be required. Still, they have to show it on the face of the form 1040. Now, there can be a situation where taxpayer receives non-cash gift for making deposits or opening an account on in a saving institution, right? So, like in a bank, in order to be opening an account, banker may give a gift as like interest income as a gift. So, if the deposit in the bank account is less than equal to $5,000, any gift or services that are valued at more than $10 should be reported as an interest income. For deposits of more than 5,000, uh, the threshold is of $20. That means any gift in the form of any interest in the form of gift with more than equal to $20 needs to be reported if the deposit is more than $5,000. If the deposit by the taxpayer in the savings account is less than $5,000, then you must report the interest income if the amount of gift is more than $10. For example, uh, like if Florent applies for a new credit card through some airline visa, the card company offers $20,000 frequent flyer miles for spending $10,000 in first 6 months. So Florent makes over $10,000 in the purchase between Feb and May, and receives 20,000 of a non-taxable bonus miles. Right. So such miles will be non-taxable. So in this case, if the gifts are given for opening a bank account, then you need to report and it will be taxable. But if you are receiving a cash bonus for opening a new account, then also it will be considered as a taxable interest. But if there are certain rewards from a debit card purchase or credit card purchase, that will not be considered as a non-taxable. That will not be considered as a taxable part. That will be considered as a non-taxable income, right? And in similar way, the customer loyalty programs that are received, like discount cards, Amazon cards, so those are also not taxable or reportable. Then there can be interest that has been earned on certificate of deposits. So any interest earned on certificate of deposit is generally taxable when the taxpayer receives it or it is receivable. The interest that taxpayer pays on funds borrowed from the bank, so that this certificate of deposit minimum needs to be maintained, and whatever interest a taxpayer earns on those certificate of deposit are to be treated separately.